This Twin Peaks Investing podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Peaks Investing podcast. This is podcast number 168. It is the 9th of December and it's around 6:30 in the UK. In England, in fact. And I'm here with my good, brilliant, excitable sometimes co-host, Henry Viola here. My name is Peter Higgins, as you all know. You can find Henry at HT Viola on Twitter/X and me at Conkers3, Peter Higgins. How are we doing, sir?
I am very well, thank you, Peter. Glad to be with you again.
Good to have you, sir. I know you've had lots of different events you've had to go to, evening shenanigans and drinky poos, and we managed to actually attend one together last week, mate, didn't we?
We did. That was spectacular. It was really, really nice to see you, actually. It's not very often that you're down in London. And so when you are down, it's really nice just to be able to pop out the office and go, yeah, you know what, let's just go and have a pint of Guinness and catch up in person.
Absolutely. Just do me one favour, Andrew. Just notch your volume up just a little bit for me, please, sir.
Is my audio down? Is that any better?
A little bit, yes, thank you. So yes, ladies and gents, last week I was invited to a Meet the Managers event for Aubrey Capital, a boutique investment firm with some specialist fund managers. It was a superb event. So big thanks to John Campbell, who invited us. They've got a fantastic array of fund managers there, including Anna MacDonald, who had a fantastic conversation with John Ewart. Is that how you pronounce it?
I think so.
E-W-R? Yeah. Rob Buris and the, I want to say, Dalrymple Senior and Dalrymple Junior, as I was calling them. Fantastic presentations that was had by all on the event. So yeah, it was great to have you there, Henry. Great to have you tagging along as my +1, mate.
Oh, it was spectacular. And you know, I've got so much time for professional fund managers. And Anna was just a powerhouse. You know, she manages their UK equities fund. Hugely articulate, hugely insightful, very thoughtful, and passionate as well. You know, sometimes you go to these events and people sort of stand up and drone on for 20 minutes and send half the audience to sleep. She wasn't like that at all. Full of energy, full of enthusiasm. The Dalrymples were just a masterclass in presenting. Wonderfully articulate, wonderfully eloquent, and very insightful. They specialise in emerging markets. And this is a field of investing I know so little about. Much of my knowledge and experience is concentrated in the UK, Europe and the US. And so actually hearing a specialist talking about emerging markets was just an education, a wonderful one.
Absolutely. Now, Henry, I needed you to share what happened after we left the event and the parade that we saw, the pomp and ceremony. Yeah, we were all like, what's going on here? And there was just hundreds and hundreds of bands persons, you know.
Well, I thought they'd turned up to celebrate you arriving in London. But
don't make me laugh, mate. I've been struggling with a cough all day. Oh, no,
we were stood outside a pub in the city. And this is one of the wonderful things about working in the city of London. Of course, you've got Mansion House, and the London Stock Exchange and all these wonderful venues, the Bank of England, that get dignitaries from all over the world. And I believe we'd actually got the German Chancellor over for a state visit. And so they got, I forget which branch of the armed forces it was. I'm going to get this completely wrong. I want to say the Grenadier Guards, and I don't think it was at all. But anyway,
it doesn't matter. It's fair to say there was hundreds of them, mate.
They'd got a full marching band out, with the Sergeant Major at the front with his baton going. It was unbelievable. Straight down the middle of the street, full band, armed escort to celebrate the state visit of the German Chancellor. And we got front row seats standing at the pub with a pint of Guinness.
Absolutely. It's absolutely brilliant. Absolutely brilliant, mate. Loved every minute of it. Yeah, it was nice, wasn't it? Just
It
nice to be
really
able to go, and
was.
you go, actually, it's not about, it's just, it gives you back that sense of, warmth regarding London. Hear all this negativity, and then you see something like that, you think, that's what London's about.
It is.
Community, rejoicing, celebrating, positive
It
stuff,
is.
really.
It
So yeah,
was lovely, and to anybody that is a little nervous about London, that reads the headlines and think it's all stabbings and stolen phones. Actually, there's a lot of nice stuff going on here. There's lots of lovely venues, lots of lovely people. So don't be put off by the fact that the Daily Mail reckons we're all going to get murdered on the streets every 5 minutes.
absolutely, absolutely. Right, Henry, thank you for that little segue, and I'm hoping that everyone thus far has not, gone out and bought all the mince pies and left me with a shortage of supply because I've not stocked up fully yet, but I have started eating them. And the best ones I've found so far are M&S, frangipane, and also frangipane from Sainsbury's Finest.
Ooh.
Yeah, so they're very tasty. So those are my two recommendations regarding mince pies if you haven't been out there and sampled any already. Right, Henry, stocks. My theme choice of this particular pod was UK stocks you and I think could do well in 2026. Now, there's a big asterisk above that because what Henry and I think doesn't mean that the market's going to agree with us throughout 2026. So we've taken a random walk without conferring regarding a couple of stocks each, and we'll let you decide what your thoughts are regarding the stocks that we discuss in the next hour or so. And please do get back in touch with us. We've had some wonderful feedback from the last pod, some great feedback about how Henry and I navigated the budget, the politics of it without getting too, I want to say left or right, but I don't want to get down that track. We depoliticized the actual budget by just talking about the facts of the day and the stocks that we covered and what we saw at the time. So thank you all for that brilliant feedback. That was probably the most listened to podcast we've had since late summer. So obviously a lot of people wanting to talk about the budget, listen to the budget, find out stocks that may do well with the budget. So thank you all for having a listen and sharing it and giving us some really, really good feedback. Right, Henry, should we start with the stock? Or do you want to say anything else before we start?
Absolutely. No, I mean, I think this idea of stocks that are going to do well next year comes with the usual caveat, ladies and gentlemen. Please do not go out and buy what we're talking about here. These are some research ideas. They are food for thought. These are not go and buy these. We're not doing a Simon Thompson bargain bucket for 2026. Although interestingly, I was just listening to him on the Investors Chronicle podcast. I think he's got a new episode out. But that aside, as you go to the end of the year, I've started thinking about what I think is going to do well next year. And I am quite nervous. There's lots of warning signals across the economy with private credit, private equity valuations, and inflation rates, and interest rates, and all sorts of things that could be going wrong. We've got the war with Russia and Ukraine that's on a knife edge. We've got the Middle East that's still, frankly, a tinderbox. And who knows what else? Who knows what else? So I'm a little bit cautious. And with that in mind, my mind's been turning to what I would loosely describe as real assets. So real, tangible things that you can hold, things that you can touch that we can't do without. Now, lots of economies are committed to rebuilding their infrastructure, investing in infrastructure, whether that's the energy supply, whether that's roads, whether that's rearming the military. And all of this rebuilding and retooling requires physical goods, and physical goods require one thing: commodities and energy. And so my first share is a commodities business. Now, it's not a manufacturing commodities business. It's actually a precious metals commodities business. And as you will know, Peter, an awful lot of commentary this year has been around the resurgence of the gold price and how gold has shot through the roof and silver started to follow it. And people are wondering, is this going to carry on in 2026? And personally, I think yes. I think inflation is on the up. I think interest rates are on the down, and both of those are positive for the precious metals prices. And so I think gold and silver miners should do fairly well in 2026 with that backdrop. And so my first research idea is one of the largest precious metals producers in the world. It's Fresnillo Plc. The ticker is FRES. Who they explore, develop, produce gold and silver resources, mainly in Mexico. They have got 7 producing mines, which I'm not going to try to pronounce because my sister-in-law lives in Mexico and will slate me forever if I try a Mexican accent.
Yeah, I was going to say the same when I talk about mine. Is that I'm going to say where they are. That's it.
I will never live it down.
And that might be a difficult pronunciation as well. No, go for it, Henry. Well done, mate.
Now, their mining operations involve both underground and open pit mining methods, and they are the largest primary silver producer in the world and a major gold mine. And I think they offer quite a timely opportunity next year as macro conditions continue to tilt in favour of precious metals. You know, as inflation ticks up and remains high in many countries, and governments struggle with debt burdens, I suspect inflation is going to remain high. And so commodities which are priced in fiat currencies are likely to tick up in value. When people are fearful, when spending power decreases with fiat currencies, people tend to move towards gold and silver as a store of value. Likewise, with geopolitical tensions elevated, you tend to get this sort of push towards precious metals. Now, silver in particular has gone absolutely nowhere. There was a spike in the 1970s, late 1970s, early 1980s, when the Hunt brothers, I think it was, tried to corner the silver market unsuccessfully. Prices spiked up to, I think it was $50 an ounce, and then fell all the way back and haven't really gone anywhere since. And they're now on the ascendancy again. Now, I think both gold and silver have got a lot further to run. Now, silver tends to outperform. I was doing a bit of studying into this, and silver tends to outperform gold in a reflationary environment or an inflationary environment. And it also has a dual role as both a precious metal, but also an industrial metal. Silver is used in solar panels and solar technologies, in electronics, and a variety of other emerging technologies, all of which are seeing structural demand across the economy. And as the world continues to accelerate towards renewable energies, I think industrial silver consumption is only going to rise in parallel with that demand from a store of value perspective. And so I think Fresnillo, as a top tier gold and silver miner, is likely to do well in 2026.
Yeah, good call. I didn't know it was the largest silver miner operator in the world, mate. So that's been hiding under a bushel to me, because all I ever see talked about regarding gold, especially, and the other miners, base metals miners, Anglo, Glencore, Rio, so on and so forth. They don't really talk a lot about Fresnillo. Maybe it's because it's based in Mexico. But a couple of things, Henry. How well is it done year to date? Because I suspect if gold and silver has done so well, gold is up 71% year to date or thereabouts, and silver is up 109%. So I suspect, if I could be so bold, that Fresnillo would be up at least 100%. Am I wrong?
Would you like to take a guess?
Year to date, I'm going to gauge my bet to say 120% up.
Triple it. 344% year to date.
Wowzer. Well, there you go. That's what happens.
344%.
And
now
you didn't touch in about the all-in costs of what they do to operate, but essentially, ladies and gents, if you're thinking about the price of silver now, having gone from, say, sub $30 an ounce to 60, if your all-in costs for silver were 15, 16, or 20, every single ounce, yeah, that you're being able to sell plus $1, multiply that by how many ounces that you're selling. So they could have an all-in cost plus of $10, $20, $30 for every ounce of silver times the tonnage that they sell. That's how profitable that this company could be, regarding their all-in cost being sub $20 or $30, and silver's being sold currently at 60. Yeah, that's
If you'd
ridiculous
like
margins, mate.
something really scary, or well, not scary actually, if you're a shareholder, forecast turnover is 21%. Do you want to know what their forecast earnings per share growth is?
Oh dear. Not when I've missed it and I haven't bought it, mate. Thanks.
38,878%.
Are you sure you got those numbers right, mate? That's ridiculous.
I'm reading that directly from ShareScope.
Wow, that is mad.
38,878%.
Talk
So
about
again,
profitable and profitable on top of profitable.
you know,
That
when
is a
I
good
see
stock.
numbers like this,
Yeah, I'm
just
hoping
go and do some reading. But
yeah, I am very, very well, I'm very much hoping that some of our long-term recent listeners have got a little bit of Fresnillo, a little bit of silver in their portfolio, and not just chasing all the different stocks that other people are talking about, because it's not one you hear people talking a lot about, Fresnillo. And it's probably the number one performing stock in the FTSE listed stocks. Is it FTSE 100, FTSE 250, Henry?
that's a good question. Let me have a quick look. It's 20 billion market cap.
It's a FTSE 100 stock then.
Yeah.
Yeah. Harding in plain sight, mate. 20 billion. And I barely ever look. I think I barely looked at it ever. Right. Here's another one, which is, I'm going to get this right, Henry, because they've changed their listing to a NYC listing. You can still access it and purchase the stocks. But it's NYC listed as this primary listing now, rather than the FTSE, although you can access it and purchase the stocks here. Okay, bear with me. So historically, Henry, right, this stock is known as Cement Roadstone Holdings, which was founded in 1970 through the merger of Cement Limited, which was founded in 1936, and Roadstone Limited, which was founded in 1949. The company I'm talking about, Henry, is a £60 billion market cap company by the name of CRH Plc. Is that one that's been on your radar? Have you mentioned that before, Henry?
I know this one, but I don't know why. Yeah,
because you've probably tendered for them, Henry. You've probably put a tender. Right, so let me just tell you a little bit about this company. The UK and NYC listed buildings materials giants, so still sticking with your theme about commodities and materials here, Henry. The reason why this jumped out at me this week was because it's set to be added to the S&P 500 index later this month, the month of December. S&P 500, how many UK registered, UK listed, Irish HQ'd companies do we have in the S&P 500? Not that many. This is a major milestone for CRH being included into the S&P 500 globally. It's a massive, massive impact for them. So I'm thinking this could mark another strategic step by S&P 500 ETFs and other entities having to purchase CRH's stocks. It's already done reasonably well year to date. So Irish-based company manufactures and distributes a diverse range of superior building materials and products, which are used in the construction projects of all sizes. It operates in 3 segments across 2 divisions. Its divisions include Americas and International. Its Americas division comprises 2 segments, Americas Material Solutions and Americas Building Solutions. Yeah, and the International division, which comprises 1 segment, International Solutions, the provider of integrated business solutions, primarily across Europe and Australasia. So, headquartered in Dublin, operating in 28 countries, Henry, with nearly 80,000 employees. Yeah, really the same size as Gallagher, bigger than Gallagher. I'm not sure. So, what we got here? What else? Yeah, so notable operations include Tarmac, which I know you know that company name. Yeah,
I do.
Oldcastle Infrastructure, Irish Cement, Roadstone, and Rudus, amongst others. And recent Q3 updates says financial results with record revenues and robust adjusted EBITDA growth, continued strategic acquisitions, an increased dividend reflecting consistent long-term shareholder value. just keeps going, mate. Net income and earnings per share trends were positive with prior guidance for full year 2025. Net income was up and increased again. Dividend was up and increased by 6%. Just going from strength to strength, mate. And they've got a buyback going on at the minute. So they're just getting rid of shares and just getting rid of them. Ongoing investment and share buyback program, 0.8 billion completed year to date with an additional 0.3 billion tranche scheduled before November to run into 2026. And the guidance for 2025 is up. Everything is up for them. So as a summary, robust, consistent growth. And I think given the S&P 500 listing, they could go on and have another little leg up for next year. And they're doing a bit of a buyback even now as we speak. So that's one. It should be on people's radar of a company of that size, 60 billion, but it's not. And I think it deserves a little bit more of investigation. And I think they could do well or be a solid sort of company for your portfolio in 2026. What's the last bit here? I did have a yield thing on it, and it was tiny little yield, I think.
1.2% ShareScope saying to me.
Say again, sorry?
1.2% ShareScope.
1.2%. Yeah, it's a tiny little divvy. Yeah, 1.2. Yeah, 1.2. So the range, 1 year range is £57.48. The high is £96.84. It's currently sitting at £94. So it's right near the top of its range. But another materials company that could do well in 28 countries. So if one country has a bit of a blip regarding revenues, it's got another 27 to fire stuff at and generate revenue from.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
Look at the Irish, mate.
I like it. And that's one that, again, you look back at the days of COVID and go, this thing was just going nowhere. Everybody thought the economy was going to collapse. If you'd bought that in the COVID trough, right down at the bottom, it was sub £20 a share. You'd have got a 5-bagger out of that for a boring old commodities business, effectively.
Absolutely. And this goes back to my argument about, you see these people that are talking about yield, 5%, 7%, 8%, 10% on an infrastructure. This is essentially an infrastructure company.
Yeah.
Its yield is 1.2, right? Yeah. And what's it done since COVID? It's done fourfold. There's not an infrastructure high dividend play in the universe of UK listed investment companies that is 5-bagged for anybody.
Yeah.
Yeah. So it's covering highways, bridges, stadiums, airports, critical infrastructure worldwide. That is your infrastructure play, ladies and gents. Not the 5, 6, 10% yielding infrastructure play that everyone's ramping on X and everywhere else. That is the one you may want to consider rather than the ones that Henry and I have mentioned before that have been spanked. Mentioned, also invested in and got spanked, by the way.
Yeah.
So that's my fantastic company.
I like it.
Best in class.
My only caveat on it, I am going to give you a caveat.
Please.
It's got a PEG ratio of nearly 8.
A peg of 8. Ooh, that's rich.
Now that is
eye-wateringly rich.
Now again, it's a whole load of analysis, research that goes into the PEG ratios. Don't just look at that number and go, no, too expensive. You'll pass up all sorts of bargains doing that. But yeah, that is looking pricey. So where you could get this at £60 earlier in the year, it's now £90. You're paying 50% more for the same company. Just make sure you know why you're paying 50% more and that it's not priced in what the market didn't know at £60.
Absolutely spot on. It's had a fantastic 12 months. Can it continue into 2026? I'm hoping so. And I think the catalyst could be the S&P 500 index. And those entities having to buy it because
when they get added to an index, I think I cut you off there.
It's all right.
All the index trackers go and buy it. All the fund managers that invest in the S&P 500, you get billions poured in, which pushes up the share price even further. So
that's the reason why I've chosen it, Henry.
Yeah. Yeah,
But it could be it could it's done very well. And as you've pointed out, the peg, which I hadn't looked at, is a bit rich at the moment. Yeah. So
it
good
is.
call.
But Americans, are willing to pay premiums for things. It's also a business that does most of its business in America. There's nothing to say that it might not get taken out by an American firm.
Who knows, mate? No, they don't bark at
All
buying
sorts of
60 billion pound companies these days, do they?
no. So all sorts, but it's a quality business that return on capital employed solidly above 10%. So a lot to like, and 32 years of paying a dividend as well.
Yep.
32 years. So they clearly look after their shareholders.
Absolutely. It might only be 1%, but times that by 30, the 30%,
Yep.
compounding.
Yep.
Compounded
Happy
over
days.
that period of time. Okie
Happy
dokie.
days. So,
Right.
sorry, go on.
Go.
I was going to say, I'm going in the other direction now. So you've gone for your giant 200 billion pound behemoth, 60 billion
60. Don't get carried away. 60 billion.
60 billion pound, building the world's infrastructure. I'm going completely the other end of the spectrum with a little business that popped up that I don't hear anybody talking about. It listed earlier this year, and it's one of those, in my opinion, rare exceptions. I think the research would probably back me up on this. Most companies, when they seem to IPO, or when they IPO, they seem to end up losing value from the IPO value almost instantly. So if the shares list at £10, within a week or two, you can buy them at 8, 7, 6. And then the market seems to adjust. Now, sometimes they end the year higher than they started, but there always seems to be this drop off as soon as the IPO happens.
Yeah.
Now, this business has done 30% since it listed, and it only listed in March. It's profitable, it's cash generative, and it's operating in a sector which I think is only going to have more demand over time due to population dynamics. And in a world where we've got all these risks, inflation, war, supply chain issues, global trade wars, etc. This is a UK-focused business providing services to the UK with something that we can't really do without. The company is One Health Group. The ticker is OHGR. And it's a healthcare provider operating within the NHS supply chain under something called the Patient Choice Initiative, which was something that was brought in, way back, 2006, I think it was, which basically was where I think it was the Labour government at the time brought in this idea that they wanted patients within the NHS to be able to choose where they got surgery done and who by. So the idea was that by opening up the healthcare market, you could incentivize choice, and if you incentivize choice, you get a diversity of providers. The weaker suppliers and the weaker healthcare trusts would die out. The more successful, more sustainable ones that provided better service would survive. And so One Health Group was founded. Now, the business was founded in 2004 and basically focuses on 4 core surgical specialisms. There's orthopedics, there's spinal surgery, there's general surgery, and there's gynecology. Now, in what's called an independent sector provider, they're authorised to offer NHS-funded elective procedures across England. And they're subject to really strict quality, regulatory, and clinical governance requirements. Peter, you and I can't just grab a scalpel and start cutting people open. You need to go through a whole raft of testing and qualifications and audits in order to offer these services. And so One Healthcare Group has passed these audits. It's on the approved supply chain list. And now they have, I think it's something like 140 consultants providing these services across the UK. They've got a network of 7 partner hospitals and 20 Quality Care Commission registered community clinics with a large footprint of outreach sites across the UK. And I reckon that as the population continues to age, as we face problems arising from increased physical inactivity, you know, more people sat around indoors at desks, etc., and rising obesity levels, which we know is a huge issue within Western populations, I think this business is only going to continue to go from strength to strength. And sure enough, earlier this month, there was a trading update that was released for the first half of their 2026 results that showed revenue is up 18% to 15.6 million. Gross profit is up 35% to 3.1 million. And the cash balance is up 122% to 10.9 million. So this is a business that's really going gangbusters. I think it's in a sweet spot. I think we're going to have more demand for elective surgery going forward. I think there's going to be more calls on the NHS, and therefore I think that the quality service provider like One Health Group should be in a strong position next year.
Okay. Sounds like a strong, I'll call them tiddlers, Henry. It's only a small little market cap company, isn't it? So it's competing against the behemoths that are in that space. So my concern would be, given it's a private business going into the NHS, and the NHS is being told, you know, you're talking about 18% revenue increase, 35% profit after tax increase, cash going up 122%. Sounds highly profitable, right? If I'm outside looking in at the NHS, I'm saying, why are you giving them all that money? And the answer would be, well, we can't actually do these elective surgeries, or we can't actually provide this particular element, and that's why we've got, you know, One Health Group doing it for us. So it would be a case of, my concern would be strategically, is there a risk that some of that revenue stream is withdrawn going forward because the NHS have got no choice but to become more and more efficient?
Yeah.
And as a small cap, it could end up getting squeezed. The margin could get compressed. Or
that's something I'd not.
So that's my only concern, Henry. For private business in the NHS, the competitive nature of it means that other people might get the work, or the NHS might just take it back in house. That would be my only concern. But those sort of margins there are brilliant. Yeah. Really strong margins. Really good.
I think that is a valid concern, to be fair. You know, the NHS is looking to make cost savings. Do you really want to be giving away 20% margins to an outsourced provider?Maybe not. You know,
yeah,
but then
so
the government's
it's
going to have to. I mean, the government's paying for these facilities anyway to some extent. You know, my understanding is that your local NHS trust, when you elect to have this surgery done, then pays One Health Group in order to provide the service to you. So it's a sort of semi-privatized model. Now, interestingly, from what I've been reading, this is how they're getting the NHS waiting lists down anyway. So there's not enough capacity within the NHS. They're having to send people to these outsourced providers.
And therefore, that momentum could continue. If they've got no choice but to get the waiting list down, then where are they going to go? They're going to go and outsource it, like you say. So that could be that push and pull, Henry. It could benefit them if they just sit in their niche and deliver the services and be seen to be, we've actually reduced our waiting list for you by X, Y, and Z. You know, so now you're looking better because we've helped you out. It could have some momentum, couldn't it? It could have some momentum. So yeah. No, nice one there, Henry. Usually profitable, a little tiddler as well. Who knows? And if they get to a point where they're obviously doing too well, one of the larger competitors will go, let's have you.
Yeah. There is no reason at all. I don't believe there's any reason at all why you could not take this model and just privatize it full stop. It's effectively a private service provider selling to the NHS. If the NHS decides it no longer wants to pay for this service, fine, let the private citizens make their minds up if they want to pay.
Absolutely, mate. Absolutely. No, good call. Good shout, that one. I'm going to take a little mini break here, Henry, and give a big thank you to everybody that has donated so far. If you pull up the Just Giving page, Henry, for MENPHYS, it is www.justgiving.com/page/Peter-Higgins, and that is the MENPHYS Just Giving page. You wonderful individuals have donated consistently throughout the year. So a big thank you to you all for your generosity and kindness. And we've met the target of £5,000. We're sitting at 5,099 raised from 59 individuals. I say 59 individuals. Several of them have donated twice, 3 times, significant amounts. So if you've not donated yet and you could, instead of buying myself and Henry a coffee or a pint of Guinness, just donate that £2. Or what's the pint of Guinness now, Henry? £8.50 in your pubs?
You don't want to know.
Yeah, you can donate that £8.50 to MENPHYS, and it'll help a disabled young person potentially get gainful employment throughout 2026. That's the goal of this particular fundraise. So I'm going to read these back. We're sitting here with the last donation from an individual who wanted to remain anonymous and donated £20 plus £5 gift aid. So thank you ever so much for that donation. There wasn't any words added to that. And then we had an individual called Andy Seagrave, who gives his Twitter handle as @VJ the Shrimp on X. So thank you, VJ the Shrimp on X. Thank you for the very informative and entertaining podcast and for raising this money for a very good cause. Good luck for 2026. And that was £30 plus £7.50 gift aid from Andy Seagrave. Thank you very much. Our good friend Matthew Gregory has donated again. And he has donated, I think that's £30 plus gift aid that Matthew has donated. And his little message to us again is a little stocking filler from me. Keep up the great work, chaps, educating us unwashed masses. We don't see you as unwashed masses, Matthew. And neither should you see yourself as an unwashed mass. This money's for a very good cause. And for bringing a much-needed safe harbour of kindness and thoughtful commentary. Thank you, Matthew, for your kind words. We'll continue to do that in 2026, and we'll look forward to seeing you in person again at some point. My good friend David Beckford, who lives in, let me just get this right, Loughborough, works in Chesterfield for a printing firm, paints firm, just get it right, paints firm, donated £200 plus £50 gift aid last week. Wanted to get you to your target, which he did at the time. Thanks again for the invite last week. It was great to see you and everyone at MENPHYS. So £200 and £50 gift aid. David Beckford, thank you ever so much, kind sir. And that was the second donation he'd made as well. Our former guest and the person that's pulling up trees in and around the Midlands, up north in Yorkshire and nationally with his and his fellow colleagues, IFF recruitment firm, Joe Ingham. Remember Joe?
I do. Of course, I remember Joe.
Yeah, see him on you see him more on LinkedIn now, I think, because he's so busy. Guys, I am so pleased to support this amazing charity and your incredible effort to raise an incredible amount to champion a great cause. Huge well done from all of us at IFF. Keep up the amazing work. And that was £300 plus £75 gift aid from Joe and team. Thank you ever so much, Joe. We look forward to seeing you soon, sir. David, about 8 days ago, loved the Twin Peaks podcast. Peter and Henry, so informative and entertaining. A fantastic cause for the fundraising. Keep up the great work and thank you. And that was £30 and £7.50 gift aid. Thank you very much, David. And then N20 investor on X. So thank you, N20. Haven't listened to the pod for a few weeks, but I have them downloaded and will do so. But with Xmas coming up, just wanted to make a donation and thank you guys for keeping us entertained and informed. And N20, your donation is very, very well received, mate. We appreciate that. So thank you ever so much. And if you haven't donated, please do so on the Just Giving page, which is www.justgiving/page.
We've actually missed 2 here, Peter. We've
got
missed some
2
more. We've
last
got
2
some
weeks.
more. We've got
Go on, then.
we've got another anonymous, which could be the same anonymous.
Okay.
Apparently, we are 2 of the good guys. When so many investors appear ultra-right-wing, climate-denying, Brexit-loving buffoons, these 2 pay it back. See, £30 and £7.
Stop! Try and do it without laughing, Henry. Come on, it's serious stuff, mate. Come on.
It's
2 of the good guys.
2 of the good guys. We're going to stick with 2 of the good guys there. That has made me that has put a smile on my face, though.
So N20's donation was £50 and £12.50. The anonymous says, two of the good guys, when so many investors appear ultra right-wing, climate denying, Brexit loving buffoons, these two pay it back. SE. Oh wow. Thank you very much, SE.
That is
£30 and
and
£7
we've also
50
got
gift aid. Yeah.
JMCD. Is that John
Okay.
McDonnell in disguise?
I don't know. I don't know. Carry on.
Love the podcast for the investing and the moral musings. P.S.
Oh,
Can
like
Henry
that.
please upgrade his audio setup for next year? He echoes like he's in the swimming bath. £30 and £7.50 gift aid.
Dear.
I would apologise for that one. The audio setup's not great here. I'm going to see what I can do about that for 2026. But
J
thank
Mac
you very
D,
much
well
for your
done, mate.
donation.
Echoes like it's in a swimming bath. Oh, that's lovely. You did get a wink and a smile as well from Jay.
Exactly.
Brilliant. £30, £7.50 gift aid. Sorry, carry on, mate. I missed a few there.
That
Apologies.
is it for the last 2 weeks. But what I wanted to say with these, I mean, we put out a bit of a.
Let me interrupt you because I found the page I was missing, Henry, and it's got anonymous here. Love the podcast and great cause. Donation, and then Electric Trends donated in the last 11 days. £200 plus gift aid as well. And that's the second big donation that he or she's made there. So that's fabulous. Lovely people. We haven't finished yet. We've got to the 31st of December, folks. So please, if you're thinking about buying a pint for Henry, or a Guinness for me, or a Guinness for Henry, or a cup of coffee for Henry, just go to MENPHYS just gift page and just drop £2 or a £5 or a tenner in there. And let's bump that total up a bit more so we can help some young people get into gainful employment next year. Any other comments there, Henry?
Yeah, just a huge thank you to everybody that's donated this year, and that everybody that is still going to donate in the next couple of weeks. Your generosity is making a huge difference to children and families that rely on the frankly incredible work that MENPHYS do. You know, Peter has, you know, he's incredibly humble about the work he does with MENPHYS. And I do nothing. I turn up on the podcast every now and again and blather on a little bit. And I am genuinely humbled by the support we get from all of our listeners that donate these sums of money. This is a huge amount of money, over £5,000 raised this year. And we're just so grateful. I'm so grateful to all of you that have chosen to give your support to us and to MENPHYS. So whether you've donated, whether you've shared the message, whether you've just encouraged other people to get involved, or whether you've done all three, you know, you've played a part in supporting us and supporting MENPHYS. So honestly, just a huge thank you from me to all of you that have donated.
Absolutely agree with that. Absolutely. You're all absolutely wonderful, fantastic, and really appreciate your generosity and kindness. As I always say, your kindness matters and you can make a difference in your community with MENPHYS or the charities that you support throughout the year. So well done to all those that do that on a altruistic basis and just give and pay it forward.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe today using the Twin Peaks promo code, and you can save up to £69. Visit sharescope.co.uk for further details and subscribe to the investing and trading analysis and data you need.
Right, Henry, back to stocks. I've got two more I'm going to whistle through.
Go on, shoot.
Right. And this one here, Henry, is going back again to the theme that's done well this year that I think could continue going forward. And this is a leading British-based precious metals company specializing in exploration, mining, and the sale of silver and gold across the Americas. Who am I talking about, Henry? I'm talking about Hochschild, which has got a market cap of 2.1 billion, a divvy yield of 0.5%, tiny little divvy yield. 1 year low of £1.66, 1 year high of £4.42, and it's just share price is just below that 1 year high at present at £4.35, if I remember rightly. The shares are up, excluding dividends, Henry, 103%. Goes back to gold and silver being up 71% and 109% year to date. Bosh, off it goes. So it focuses on underground silver and gold mining, operating primarily in Peru, Argentina, and Brazil. I'm not going to go and try and pronounce these names of where they've got them and what the names are. Recent half-year report for 2025, revenues up 33%. It goes back to, again, all-in costs, profitability, how much ore regarding gold and silver they've dug out and sold significantly. Up 33%, £520 million they made in the half year. And that was despite operational challenges at the Mara Rosa mine in Brazil. That's one of the names I could pronounce, Mara Rose. I'll use that one. So revenue, 520 million, up 33%, as I just said, from 391.7 million H1 2020. Profit before tax was $109 million versus 83.1 million year on year. Earnings per share, 12 cents versus post-exceptional of 18 compared to 10 cents and 8 respectively for 2024. Cash and cash equivalents of 109.8 million, and debt was reduced to 203 million from 215. And as I said, it pays a tiny little dividend. So because of the problems they had at Mara Rose, attributable silver production was down slightly, but still they produced and sold 161,000 ounces of gold, Henry. So imagine the markup on that. And the all-in sustaining costs, Henry, for all their gold and their silver and all the rest of it, $1,914 per ounce. Yeah. Where is gold right now? All-in costs, 1914. Gold is sitting at 4,213. So that's 100% plus that their all-in cost is above. Yeah, all-in cost is down at 1914, and they're selling it at 4,000 plus. That is ridiculous.
That is astonishing.
Right? So here's something to look out for, people, because I grew up, and I think most people have grown up with saying, if you want to buy an ETF or you want to buy a stock exchange listed entity, get something that's listed towards the S&P 500. That's the one that's outperformed the longest. It's consistent as ever. Year to date, silver's up, 109%, as I said earlier. Yeah, that's 6 times the performance of the S&P 500 year to date. Of course, it's a one-off. Silver's not gone anywhere for the umpteen years. It's having a good year this year, stellar year this year. It ain't going to happen again next year. I don't know if it will. But this year, it smashed the S&P 500 by 6-fold. So, the reason why I've chosen that is because of the ounces of gold it's digging out of the ground and the rate that it's digging it out of the ground. And the margins on this is absolutely scandalous. And despite increasing costs all across every single thing that they're doing, the all-in cost for the next half of the year is deemed to be the maximum it could be is 2,080 all-in costs. If gold sits there at 4,200, it's still 100% markup on what they're producing. Yeah, not sure of how many other companies are out there producing at 100%, Henry, margins, but we'd like some of that, wouldn't we?
That is just absolutely
so the reason why I picked that is not only the all-in costs, sustainable costs, Henry, being such significant margin, producing so much margin, is because despite Mara Rose having its problems through the year, where they had essentially a profit warning in August, September of this year, and the share price went down 15-20% at one stage, it's now sitting right back at, if not thereabouts, at its 52-week high, despite that setback. Because come early 2026, they reckon that Mara Rose's issues will be done with. Therefore, more efficiencies come, more gold and silver comes out, we carry on again. So despite them having a spectacular year already, I think it could be another stock for 2026 to investigate that could continue to do well. Could gold prices crash? Yes, of course. But I think all the different noises and the difficulties we've got in the markets and macro and geopolitical and inflationary, I think gold is going to still be there or thereabouts, give or take 5%, if not even go higher. So that's why I'm choosing that one, which is Hochschild Mining, ticker symbol HOC. Thoughts, Henry? Bit silver and gold there. You chose Fresnillo.
I like
I've chosen.
it. I mean, I like Fresnillo. I like Hochschild. It's the same argument in reverse, isn't it? How much of the increase is priced in already? I think, I honestly think gold's got further to run. I think you're going to get to the end of 2026 and look at, what's the gold price in pounds at the minute? 3,000 and something an ounce?
I'm not sure about in pounds, sorry.
3,100, something like that. I think you're going to look at that at the end of 2026 and go, geez, that was a bargain. And I think it's only going to go up further the next couple of years. And so these miners, I think they've got a long way to go. So yeah, I like it. I like it as a name, and it's a good, stable, cash flowing, productive mine. This isn't a gold mine with no gold at the bottom of the mine.
It's not. So Peru, Argentina, and Brazil, reasonably safe geopolitical sort of arenas as well. And they could have a bit of an edge there as well.
Invades Venezuela, and then all bets are off.
All goes off if that happens, mate. Of course. But yeah, it might even be an FX hedge because they're making so much money in dollars, against, being listed over here.
Yeah.
Right. So that's the last one. Now, this Tiddler, Henry, was prompted to me by, I'm just get his name here somewhere. Where's his name? I hadn't looked at this stock before. Richie. So Richie F321 on X on the 3rd of December. Yeah. Jumps out of the blue and he says to me, "Good morning, Peter. Have you come across Andrada Mining? #ATM. The only tin producing company on the UK stock market, especially with tin demand and supply issues and tin hitting $40,000 per ton. It's worth looking or reviewing. Keen to hear others' views." And I replied, "No, I've not looked at that, but it looks very interesting. I didn't know we had a tin producing company in the UK." So I want to talk about this one. So the ticker symbol, as I said, is ATM, which is where Henry goes very frequently on a Friday and Saturday evening when he's out on the drinky poos and going to the restaurant, pulling out more cash to go out with. Market cap is at 62.66 million. Shares year to date is up 60%, Henry. It's the speculative end of my sort of stocks that I've spoken about already, but it could do well. So Andrada Mining is a London-listed technology metals miner with primary operations in Namibia, focusing on the production of tin, thallium, and lithium, aligned with global energy transition and sustainable mining practices. So yeah, HQ'd in Guernsey, operates globally and strategically focused on critical metals, which has had a lot of airplay recently, critical metals, as you know. And the company has got, this is my only concern, lots of shares in issue, 1.87 billion shares in issue, right? So it's at 3.4 pence per share is what it's sitting at. It's gone from 1.7%, 7 pence per share to 4.4, sitting at 3.4 at the minute. Mining assets and operations, as I said, in Namibia. Seems like a reasonable jurisdiction there. And it's got some exposure to lithium as well, the Lithium Ridge, which is approximately 3,300 acres, focus on spodumene dominant lithium production as well. So it's got that production, but it actually produces tin, Henry. Yeah. Financial year performance for the year ending February 2025 achieved revenue that was up 33% year on year. Gross profits was up 72%. Operating loss reduced 52%. So it's heading in the right direction. Last data for the 6 months to August, ore processed was up 10% year on year. Tin concentrate production was up 14%. That was 858 tons of it. Tantalum concentrate was up 12%, 27 tons. So it's producing and doing for a tiny little tiddler company. Henry, tin, what is it used for? What is it good for, as Frankie Gonsalves would song goes for? And it's not absolutely nothing. It's actually involved in soldering. Everyone has to solder stuff, tin chemicals, tin plate. When you go and get your little tin of beans, Henry, yeah, or your tin of fruit, it's in tin, isn't it? Or is it aluminium tins? Is it tin or anyway?
I think it's aluminium, but I might be
lead
wrong.
acid batteries, Henry. Yeah. So it's used in tech as well. So that's where it's used in, mate. 16% of tin is in chemicals, manufacture of tin plate, food cans, metal packaging. And obviously it's getting recycled now because there's less and less of it. There's no new tin mines coming into production. Larger producers of tin are China, Malaysia, Indonesia, Peru. So that's my very, very speculative one to have a look at. Andrada Mining Limited. ATM is the ticker symbol. It's a tiny little stock. Go and find Richie F321 on X. He's the person that's been championing that stock for a good while. I suspect he's up 60%, if not more, year to date on that stock. Could it do well in 2026 if tin prices stay up there and their all-in costs remain reasonably low and they bring on other productions? It could do well, but highly speculative, folks. That's the one that I'm sharing last. Thoughts, Henry?
Well, I mean, my initial reaction is, oh Lord, oh gosh, it's a mine somewhere in Africa. Oh God. But it's not just a tin miner, is it? I'm interested by the fact that they also produce tantalum and lithium, which
Yep.
my understanding, like you say, they're used in electronics, batteries. So you've sort of got a green, clean energy play there. But the revenue's coming from tin. And so there's some risk there to me about their execution and resource development potential. Now, it relies on them expanding into lithium and tantalum, which means that you need to extract the metals, refine the metals, process and ship the metals. You've got regulatory hurdles with doing that. You've got logistics hurdles with doing that. You know, if exploration or development underperforms, the upside on this, you know, it might not go anywhere with 1.3 billion shares in issue. It's got a relatively small market cap and quite a narrow base compared to the global miners. So you might find lending's difficult. The banks might not be too keen to lend to it, which means financing might be challenging. If they have any operational shocks, that could give them headwinds. And venturing into new metals, right? They know tin. They seem to be doing okay with tin. Do they really understand lithium? Because my understanding of the lithium market is that the lithium price has cratered.
It's absolutely crazy. With the lithium, they're at the exploration and pilot production stage, so they're not quite there yet.
Yeah.
But they've got some good relationships with international partners like SQM, so they should do all right because they're doing the bulk of the work, if you know what I mean. They're a larger entity. But yeah, you're spot on. Any sort of small company in the mining space needs to have a cash flow to keep them sustainable, you know, so they can carry on doing what they need to do. So that could be an issue for them if they fall into any difficulties. But yeah, that's a tiddler. That's a Harley. I've started with what? A 60 billion market cap. They've ended up with a 60 million market cap-ish stock. So those are the extremes, folks. You know what I mean?
Yeah. Yeah. But interesting name. Interesting name. And again, thank you. I've completely forgotten the handle of the person that wrote in, but thank you for writing in with the idea because it gives us something new to look at that we wouldn't usually have picked up on. I know the name. I've never looked at it in depth.
Yeah,
But it
Richie
does,
F1 F321 was the person.
Richie. So yeah, thanks for writing in, and don't be afraid to, because we're, like I say, we're always up for a conversation about these sorts of things. So yeah, if you do hold, best of luck with it.
Thank you very much. Now, is there anything else you want to share, Henry, before we conclude this? We're nearly on 60 minutes. We've done well. We've
We
raced
have
through it.
done well. I think the last thing from me, those of you that do write in, that watch us on YouTube, might have seen that we had an interesting comment left on the latest video from an anonymous account that we've never seen before. It was either YouTube, or it might have been Twitter, actually, X, from an account that I've never come across before, Peter's never come across before. That was something along the lines of, Henry's not particularly great as a co-host, Peter. You ought to get shot of him or bring a third person onto the show. So I'd just like to address this one head on, to be honest with you. First of all, thanks for taking the time to write in, whoever you are. But if your first ever engagement with either me or with Peter is to demand that one of us be removed from the show, it's kind of hard to take that too seriously. You know, the long-standing members of the audience that we've had, I've been on the show for over 2 years at this point. They know exactly what we're about. You know, providing balanced, informed analysis, not partisan cheerleading based on politics, not ramping shares. And that's what we were trying to do with the last episode. I think that's what we did do.
Yeah, we got fantastic feedback, Henry.
And this is the thing, you know, offering what was factually a measured view on the budget wasn't a defense of a political party. Peter and I don't actually sit on the same side of the political spectrum. We've just had an honest debate and an honest assessment of what came out in the budget. Now, if someone was expecting me to go on some sort of performative rant there, and get partisan and start throwing rocks at people, they're listening to the wrong show. This show's about investing. It's about thoughtful, careful analysis of the world around us, careful, thoughtful analysis of what we're seeing and what we're doing. And that requires clear thinking, not just reflective outrage about what we've seen in the headlines. So what I'd say is, thanks for taking the time to write in. We welcome debate. I welcome debate. I welcome challenge. I welcome alternative perspectives on a range of topics. They're the signs of a healthy community. And I think a community that continues to thrive here on the Twin Peaks Investing Show. But calling for me or Peter to be booted off the show without any prior engagement with either of us, without any reasoned arguments, it's not particularly constructive. I don't think it reflects the values of our audience as a whole. And I don't think it reflects the values of what Peter and I are trying to embody on the show. So if you'd like to discuss anything with Peter or I, any points about the pod, anything we've discussed, please do write in. We always love to hear from you on X, on LinkedIn, on YouTube. Don't be a stranger, but please don't turn up out of nowhere and simply demand that one of us be booted off because you disagree with something that we've said.
Good point, well made, mate. Well done with that. Just to reiterate, some of the feedback we did get, Henry. One was from Matthew Gregory. Another really good show. I felt your coverage of the budget was excellent. Good signal to noise ratio. Even-handed coverage of politics is hard, and you folks made it look easy. Yeah, so that was one. Let's have a look at another one. Here. Let's have a look at this one here. So this one, Pat Vieira. Oh, he was just talking about, because we mentioned SPY, didn't we? SPSY. And he said, always great listening to these two highly intelligent, interesting, and thoughtful investors. Yeah, so that was from him. What else we got? Let's pull out one more. No, we don't need to pull out one more. That's enough, mate. You've smashed it over the time you've been here, Henry. You've been thoughtful. You've been considerate. You've come well researched ahead of time. You've been very considerate regarding all the different dynamics and all the different machinations of people's views and thoughts. And the beautiful thing about the podcast is it's really nicely balanced in the sense of the coverage, the thoughtfulness, and the breadth of stuff we have to cover in a space of 2 weeks, in the space of an hour and a half. Sometimes we're just all over the shop. And to have that sort of being able to just flow with whatever we're talking about is brilliant, and it's enhanced the quality of this podcast no end since you've been on it. So I'm happy. And there's no way, that I'll be changing anything that we're doing regarding the pod going forward. Yeah. Will we get some additional guests on? We've neglected that. I'll take the grief for that. In 2026, we'll have a few more guests on. We'll do a few more bits and pieces. But will you be the co-host of the show in 2026? Absolutely.
Thank you very much, Peter. It is a pleasure to be here.
It's a pleasure to have you on here, mate. So yeah, all good. Ladies and gents, thank you ever so much. This is going to be going out on the 12th of December. It's going to run through until the 24th, 25th-ish. We're going to try and do another recording as well at some point, and that will take us into the new year. And then Henry and I will hopefully be seeing you guys with your commentary with regards to the pod over the course of the Christmas break, as you get time to watch it, listen to it on YouTube and other platforms. Can I ask you a big favor, ladies and gents? If you are listening to our pod mainly on Spotify, please can you send Henry and I a little screenshot of your Spotify Wrapped for 2025, your top 5 podcasts that you've listened to, and just take a little screenshot. If we're in your top 5, just send us a little picture and a comment if you want to share with us how many minutes you've listened to the pod. We fully understand that we only produce the pod and put it out there once every 2 weeks, and a lot of the pods are out every single week, so some pods are done daily, believe it or not. Short and sweet ones are 10 minutes, but we don't mind. If we're in the top 10, please share a picture of your Spotify Wrap. We got a message from @Spen06 on Twitter, and he's using it on Spotify, which is under the Conkers Corner umbrella. And top podcast was Conkers Corner, which is Twin Peaks. And number of minutes listened was 1,835 minutes during the course of 2025. And he was in the top 3% of listeners worldwide. So congratulations there, Spenno, and thank you for sharing that picture of us being your number 1 pod for 2025. So if you're out there listening on Spotify, please share a picture of us on or within your top 5. We'd love to see it and hear from you. And thank you all for listening in 2025, and we look forward to seeing you and hearing from you in 2026. Henry, superstar, thank you ever so much again. Go and chill, go and relax, enjoy. I'm going to be indulging in a mince pie this evening. To the frangipane.
Colour me surprised, Peter. Colour me surprised.
Sweet tooth. My sweet tooth, mate. Honestly, gosh. Until the end of January, I'm not sure what my tummy's going to look like, but it's going to be rotund, is the word I'm looking for. Right, ladies and gents, that is a wrap. We will see you in 2 weeks' time again. Have a fab time. Visit family, friends, enjoy and celebrate each other's lives and company. Henry, you take care. Love to the boss. Yeah, and I'll look forward to seeing you soon, sir. Take care. God bless you.
Take care, Peter.
Twin Peaks Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.